Hello everyone. This is full course 2 Introduction to Trading, and I will start with a question. Do you know the difference between an A-book broker and a B-book broker? Do you know market is driven by time, price and value? If you don't know that, then you missed to learn the proper introduction to trading. Now, my name is Big Boss, and this is the introduction to trading full course. I need to label somewhere here. It should be in capital letters. Introduction to trading full course. One thing you should know about trading is the first information you were introduced to when you were starting trading, that is what you believe the forex market is, and it is very hard for you to change. If you came to the forex market and the first thing you were taught is indicators, then you always believe indicators will works with your life. If you are introduced to ICT, if someone tries to change you to SMC, you will feel like no, this is not the right way to trade, and you believe ICT more than SMC. Same as someone who is trading price action and indicators. If you were introduced to indicators first, you trust indicators more than people trading price action and ICT. So, if I come here and tell you this is the way the market moves and this is what you should be doing, then you will feel no, that is how that is not how the forex market works. Remember, forex market is mathematical. Forex is money. Everything, every price point, every time point is calculated. It's not random. The algorithm is running based on math. There is an equation which is running this market, which the algorithms have to obey or follow. There are rules. There are rules which this market has to obey. And this is the proper introduction to trading full course, from the beginner phase to the advanced traders. The best introduction full course, I think 2026, because I'm not trying to teach you what is written on a book. I'm teaching you what I know, because a lot of introduction videos to trading, I have watched a lot of them, and most of them you just find they are reading something from a book. They're just teaching you a book. I am teaching you what I know is the best way to start trading, from the beginner to the advanced, from what is trading to how to use MetaTrader, how to risk, how this market is moving, everything, everything will be put into record inside this video. Okay, now, first, if you are a beginner, then you need to know what is forex. What is forex trading? Because a lot of people, they don't even know. You are a forex trader and you don't even know what is forex trading, because you just started to, what is a candlestick, you started there, you don't even know what's the meaning, the true meaning of the forex market. Basically, we are buying and selling from the market in hopes we are going to make money from the exchange rate. That is the proper introduction for a forex trader. You are here to buy and sell commodities, but that is currencies, commodities, stocks, in hopes you are going to make money. You only have two options: buy and sell. So your win rate already is 50%. But when you are introduced to the forex market, learn the wrong things, your win rate drops from buy and selling from a 50% win rate to 20%. Like every 10 trades you take, you're getting 2. And that's very bad. Though you can make money with a 20% win rate. How? Risk reward ratio. Now, let's get out of that, please. Now, if you want to start trading, what do you need? First, I'm teaching you like a kid, someone who has never learned forex before. What do you need? First, you will need a laptop or a phone, but in the long term, you will need a laptop. Agreed? You gonna need a laptop there. Number two, you will need someone we call a broker. Now there is market and there is broker. Market is the real liquidity, where the money is. The money we are trying to buy and sell is in the market. And now there is a broker. The market is called the liquidity. The market is the liquidity. Now you have a broker who is connecting you to the liquidity, because you don't have direct access to the liquidity. Retail traders, they don't have direct access to the market. So that's where a broker comes in. Why? Because for you to have direct access to the market liquidity, you have to have certain amount of money. There is a limit you should have for you to gain access to the real liquidity in the market. That's why I told you there is where the brokers come in. They come with the money, and clients come to the broker, and then the clients are connected to the real market by the brokers. Now, and here is where the broker plays rough. There is an A-book broker and there is a B-book broker. A-book broker connects a trader direct to the market liquidity. But a bbook broker will connect will the bbook broker will be operating like a casino. He is the liquidity. So if you lose money, he gets all the money you have lost. But if you make money from the market, then it's not the money from the real market you're making, but the broker himself is what is the one providing the money, is the one providing the liquidity for you. So if you make money, you're making money from the broker. You're not making money from the market. Now this is how it operates. Now if an ebook broker, now all profitable traders, they are connected to an ebook broker. Ebook. Now every broker has an ebook and has a bbook. So if you are a profitable trader and you join to that broker, they will connect you to the real market. They will connect you to the ebook. So you will not be making money from the broker. So broker is not making losses. So if you are being connected to the direct market, then you are making money from the market. Broker is not experiencing any losses. But if 90% of traders are losing money, then there is where the brokers take advantage and start providing the liquidity for you. If you are losing money, instead of that money you are losing going to the market, now they provide their own liquidity, and if you lose, they make money. But if you make money, they lose money. Another way broker makes money is through spreads. Every click of a trade you click, it will always start with a negative. So your work is just to find a broker with lower spreads. Now I will start talking about spreads along later. So I have said, for you to start trading in 2026, you're gonna need a book or a laptop. You will need a phone or a laptop. Number 2, you're going to need a broker. Number 4, you're going to need MetaTrader 5. This one, you are going to need this. Yeah, let me write the let me write here. Things you need. No, all you need to start trading. Number 1, we have said come here. We have said you're gonna need a phone or laptop. Phone. You're gonna need a phone / laptop, comma, you're gonna need a laptop, you're gonna need a broker, and after you need a broker, you will need something we call MT5. Now you see, you will need a book, a phone or a laptop, and a broker, and then from a broker you will download MT5. From a broker, MT5, comma, and a demo trading account. A demo trading account. Now, after you open a broker will provide you with MT5. You can download directly from MT5 website, but the best way, download your MT5 from the broker you are using. Remember, your broker should be verified verified by, if you are in Kenya, your broker should be verified by is it the CME group? No, it's not the CME group. What's the name of this? Brokers in Kenya, they should, yeah, CMA, yeah. They will make sure your broker is licensed by a CMA if you are in Kenya. You can go to the CMA website and check the brokers which are verified in Kenya. Of course, one of the brokers verified in Kenya is XNES, HFM, FX Pesa, Deriv. Those are the brokers, one of the brokers which are verified in Kenya by CMA. The country you are in, whatever the country you are in, go check what verifies your broker in your area, and then make sure you're using a verified broker. Sometimes I usually tell people, trade with a broker where you know where their offices are. You can use the global brokers. There are brokers which operate globally. You find they are, like, you can find they are verified in almost every country, like FBS, like global markets. Those are brokers verified worldwide. Though you find most of the time these brokers, they take that advantage of of the of being trusted worldwide and start taking advantages over their traders. I haven't said the broker I have mentioned they are doing that, but most of them, it's what they are using. Purposely, me, I use the FBS. That is the broker I trade with. You can even check here, down here. I'm using FBS broker. So, another thing. Now, if you have a broker, now you need to know how do you link your MT5 with your trading account, and then you will see the chart. And now after you see the charts is when the work starts. You are in a new city, you don't know where to start, you don't know what to do, you are just looking the charts and you are confused. And that's where Big Boss comes in. How are you, brother? Now let's start. Now in the market, you have two options: selling and buying. You buy when it's cheap and sell when it's very expensive. Like, even if you go to the market to buy tomatoes, do you buy when things are expensive? No, you buy when it's cheap and sell when it's high or expensive. Like, buy low, sell high. Buy low, sell high. Now in forex market, we have time zones. We have time frames. We have time frames in forex market. We have time frames. We have time frames. We have time frames. So, If I tell you to buy high, to buy low and sell high, I basically mean the time frame you are in. If you are in 5 minute time frame, make sure you're buying the low of that 5 minute candle and you're selling the high of that 5 minute candle. If you're in 1 hour time frame, make sure you're buying the low of that 1 hour candle and selling the high of that 1 hour candle. If you are in a 4 hour chart, make sure you are selling the 4 hour chart candle high and buying that 4 hour candle low. Now, let me show you illustration in the chart. Now, this is a 4 hour chart. This one. This is a 4 hour candle high. So you're supposed to sell there and you're supposed to buy down here. The next 4 hour candle, you're supposed to buy here and sell its high. So your work is to predict where will be the high and the low of that 4 hour candle you are in and trade. You can even go to the daily time frame, like less today, like previous day, like this was date. This was on Thursday, date 6. You are supposed to buy low, go to that daily time frame, come up with your mathematical formulas or whatever strategy you want to use, and make sure you are buying the low of this candle and you are selling the high of the daily candle. Now that's how you become a day trader, buying highs and lows of the candles you are in. If you are in 30-minute time frame, you're trying to buy that minute candle low and high. No, that 30-minute candle low you're buying is high you're selling. That is when what you're supposed to be doing. Predicting, it's a time based market. Just look in the structure and you're trying to predict where. But the good, what I tell people is use the 4 hour chart. Let's say a 4 hour candle, I need to be having 4 charts here. I need a bigger chart here, and then I will enlarge it this way. This is a 4 hour chart. Let me show you pale slowly. And this is the daily chart. I want to enlarge even this, and now I have the daily chart here this way. Now if you check, this is daily candle, it's high, it's low. You're supposed to buy here, sell the top. No, let's go to the previous day. Like this was on Friday, I'm recording on Sunday. Now this was on this candle you are supposed to buy down here and sell up here. So if I put a line below here, you are supposed to buy the low of that daily candle and sell the high of this daily candle. For this day, this is what you are supposed to, I was expecting you to do. So if I go to a lower time frame, like 1 minute time frame, and I compress this chart this way, you will find I was supposed to buy where? The lowest low of that day is here. So I was supposed to buy here and I was supposed to sell from there. Can you see that? I was supposed to buy here and sell there. Can you do that? Can you do that? Because if you try to get the daily expansion, that means you are trying to hunt the low and the high of that day. It's not impossible, it's very possible to determine where the low of the day will form and the high of the day will form. If you can be able to calculate the exact point and come up with your models which can predict the high or the low of the day, that is all you need. That is all you need. Because you are sure you are going to, on a zero drawdown trade, you know you are buying the lowest level of the day and you are selling the highest level of the day. So there is no way market is going to break there. and go into losses. Or now what I the other thing I advise people to use is the 4 hour chart. But now that is advanced part of trading. Now let's go back to the introduction. A little bit to the introduction. We will learn that a bit later because this is a bit complicated for beginners. Now let's go to our chart. Here, introduction to trading full course. All you need to start trading is a phone, laptop, a broker, MT5, a demo trading account for your practicing. Now, there are key forex terms you should be familiar with. You should be able to know what is a pip, what is a pip, knowing how to calculate pips. Remember, how you calculate a pip for gold is different on how you calculate a pip for a pip. Let me write all of them here. Pip. You should know how to what to differentiate between spread, lot. If you're a beginner, I usually say let your lot be 0.01. If you're a beginner, when I just got into the market and I was using 0.1 and I'm trading gold. Leverage. What is leverage? You should be able to differentiate what is a leverage. You should be able to know what is a margin call. Margin call. You should know what is a stop loss. Stop loss. And take profits. Comma. Take profits. Now, can you see that pip is the smallest price movement in a currency, the smallest one? No, now it's like 4111.14. If I take 4111.13, that will gold will be have moved by 1 pip. You take the high, if you know how many pips gold has moved, then you take the difference, like 4232.67, and let's say I take it to 28.67. Now gold will have moved by 32 minus 8, 40 pips, because this will be 4 and 0. Gold will be have moved 40 pips. This. But for Euro USD, how you calculate pip range for Euro USD is different from how you calculate for gold and GBP GPY. But literally that is not that important. But how you calculate pips, I will make a video later, but there is a lot of YouTube videos showing you how to calculate a pips, how you GBP USD GPY. It has its own way to calculate pips. Gold has its own way, and Euro USD has its own way. Currency pairs gold, not each pair, but most of the pairs they calculate pips is the same way. They have the same formula, but for gold and USD GPY is very different. Now. But the thing is, you're just taking the highest price minus the lowest price. The difference there is what we call a pip. That is the pip movement, or if you want to call it, you can call it a range. Pip movement. 1 2 3 4 5 6 7 8 9 10. If gold moves from 48.27 to 42.28.77, then gold will have moved by 10 pips. How much is equivalent to 10 pips if you are trading with 0.01, or if you are trading with 0.1 lot size? Now there is something we call lot size. This is where now I am. This is standard trading sizes. We call it standard trading sizes. There is a difference of, if you are using the more lot size you are using, the more profit you are making, but the higher risk you are taking. Someone trading with 0.01 is taking a smaller risk compared to someone using a lot of 1. Now if 42.32.67 and 42.28.67, that range is 40 pips, then someone with a lot of 1, using one lot of 1, will make more money than someone using a lot of 0.01. Are you getting that? Are you getting that? Pip range, leverage, margin. So for beginners, I usually advise, please, 0.01 till you know how this lot size works. Me, I just stayed in the market long enough in a way I just understood what is a lot, what is a pip. Like, you don't need them, but you need them. For beginner, you need them. You need to know what is a leverage. If a broker is offering 1:300 and you have a $10, you can't trade gold. But if you have $10 and a broker is offering a leverage of 1:3,000 or 2,000, you can trade gold with $10. But just know, the more the leverage you are using, the more you are exposed to risk. The more the leverage, the more the risk. The more the lot size, the more the risk. Margin call is money required to open a leverage position. Now, let's say you will find, now let me just use an example. A broker offering a leverage of 1:3,000 and you have $20. You will enter more position on that broker than a broker offering a leverage of 1:1,000. Now you can, if you don't get what I'm saying, you can just search what is a leverage, what is a margin, what is a stop loss, what is a no, like what is leverage and how to use lots and margin. Though they ain't that important, but this is the basics of trading. If you don't understand this, then you are not a trader. How to put a stop loss. Today market is closed, like I can't show it. But a stop loss is if you click buy on a position, you will put, and let's say you have $100 and you want to risk $20 per trade. I'm saying you have $100 and you want to risk $20 per trade. So that means your stop loss should be if you're using 0.01, if you're using 0.01, your stop loss should be 200 pips away from your entry. If you are using 0.02, your stop loss should be 100 pips away from your entry. Are you getting that? And now we will come talk about now we will come later talk about how how to trade, the risk management part of trading and the psychology part, where I will tell you you should give you should give your trade a breathing space. You should not make your stop loss too tight. In a way, a slight fluctuation in price, you are taken out. No, that is not the proper way to trade. Are we on agreement? Now, how to take profits? Now, these stop loss are automatic. You can automate your stop loss, you can close your trades manually, but due to emotional fluctuation, due to your emotional things in trading, I prefer you just set your stop loss and take profits and go. If now this is for beginner, if your trades hits take profit, you are making money. If your trade hits stop loss, you have lost your money. Are you getting that? Nice. Now, let's go to the next thing now. Now, the next thing, we are going to talk about forex, like the general chart. The general chart. Now remember, remember, you have you have downloaded you have downloaded your MetaTrader before you do everything else in the MetaTrader. Now, before we go to the next thing, we have talked about spread, lot, leverage, maximum, everything. Now, I want to take you procedural, the right way. Procedural, the right way. Now, now you have downloaded your MetaTrader from the broker you are using or the MT5 site. You can even download it from Play Store if you are using a phone. Now, how do you set your MetaTrader? Now here, you will see something here. Here, there is this. You will be coming here, click login. There. Now, this you will put your trading account there. You will put your password, and here, if you are having a demo account, you will click demo. If it's real, you will click real. Now I'm teaching you, after you download MetaTrader, you're gonna need to know how to use the MetaTrader. In span of 2 minutes, I will explain you how to use this tool in just 2 minutes. MetaTrader is the easiest than TradingView. That's why and today I usually use MetaTrader. So you click OK. If it's demo, you put demo. If it's that, you put that. Now, in MetaTrader, you will have a tab for, you will see up here, you will see a tab for time frames and a tab for tools. Now this is the lines, the fibs, the fibs are there. You will see a small tab for time, a small tab, we call this, if you click this, time frames. These are called time frames. Now let me show you. If you click to the upper side there and you right click this way, you will see time frames. If I click time frames, they will disappear. If I will right click again and click time frames will come back again. So this is the time frames. This is 1 minute, 5 minutes, 15, 30, 1 hour, 4 hour, daily, weekly, and monthly. That is how the time frame are. Now These are the tools which I will be helping you to trade. This is a trend line, this is a Fibonacci, this is now where you draw your text. I don't, this is an arrow, this is a triangle, this is a vertical line, this is an horizontal line. Now if you want to enlarge your MetaTrader or compress it, you are going to be using this tab, this one here. That is for compressing, this is for enlarging. Now if you do this and if you click this, then your MetaTrader will appear on a window like this. Now you can monitor multiple currency pairs. Now if you want to close all these and just have one screen, then you just click it there. It will bring you to your main tab. Now to enlarge, I have said you click there. Now me, I don't know I don't know how these are used. They are not important to me. This is for the algo traders and stuff, but me, I don't trade using automated systems. Now you have help here. Help is not important. Window is not important. Tools. Now window, there is nothing important there. Help, there is nothing important here. Or what do you need help for? Tools, nothing important, unless you want to trust to strategy, but for beginners it's not important. Now here is where it's important. Now chart, when you click the chart, that is very important, because if you analyze your chart and you want to save what you have saved, like let me show you something. Let me compress the chart. I have shown you how to do that. I want to put this template 0 nothing. Now if you have analyzed your chart and you want to save what you have analyzed, you usually come here, put a line. If I put this line there and I put another line here, can you see that? And now I want to say this is my analysis. I don't say this is your analysis, but if you want to say this, you will be coming to charts. Then you go to templates. Do you see how I have saved my trading days? This is my trading analysis since when? May 8th. May 8th. I've been recording my analysis. What after you analyze, you save it, just in case your laptop goes off or whatever the shit you're using goes off, your analysis is still saved. So after you do that, you will just be it's either you click charts or you right click the screen this way, and then you will go to save templates. It will bring you a tab like this. Then you can save your analysis. Today is 14th. Then I will save that. Even if I delete this this way, I will try to save it. I'll come here and click 14th. It will bring back my 2 lines even if my laptop went off. So you don't need to start again and analyzing. So that's the best way you can be keeping your data. After you analyze, you save the chart that way, and you save with the date of the day for easy remembrance. That's how you do it. Now another thing here which is very important, you can use the line chart if you are interested, or you can use the bar chart if you are interested, but see, as we stick with candles. That is after you right click. Another thing which is very key, it's insert. Here all you need is you learn about indicators. Here is where you insert indicators. Click there, insert indicators, the indicator you need. If it's a trend trend indicator. If it's an oscillator, you'll find there. If it's a volume indicator, you'll find there. If it's a Bill Williams indicator, you'll find it there. Let's add fractal Williams, the fractals. Just click there and your indicator pops up saying, see, my indicator is there. If I want to delete, I would just put my point to the indicator, right click and delete the indicator. That's all you need as a beginner. You don't need anything else. Here what you should be focusing is the toolbox. Here click toolbox, and now you'll be able to see your trades down here. Here trades, your history, your everything, you'll be able to see it down there. If you don't want to see this screen, then you close it. But if you want to see your running trades, you'll just be going to view and go to your toolbox. Now the other thing you need to know is how to add a pair on your MetaTrader. Just come here, you always go to files, you go to new chart, and now you can add any pair you want. New chart, any pair you want, either forex, the main pairs. If you need CFDs, energies, indexes, anything you want, you just go to the new chart, and after you see it, you just click it. Let's just add Euro USD. You can see I just click there, and my Euro USD chart is here. And now there is how you can modify your charts. You can see my Euro USD is here. It's now claimed using a saved template. Because when you are loading a new chart, it will come like this. Let's load USD GPY. It will come something like this. Now if you don't like this format of these charts, you will just be right clicking, move to properties there, and now you can customize your chart the way you want. If you don't want the grids, you remove grids. You can see there is no grid. You can come here, change the colors the way you want. Black and green, no, you don't want that. You want color on white. See that? You can change that way, and now your chart is complete. Now if you want to close the tab completely, you come here, you delete the chart, not here, down here, you delete it, and now we are left with our gold charts only. Now we are done analyzing. Now you know how to use MT5. You know everything you need to. Now that is all you need to get started. Now where do you start learning from? Now the question is, where do you start now? Now you know everything. You know you know to use MT5, you know introduction to trading, everything I have taught you. Now next thing you should put your eyes into is now what you can see in the charts now. And here is where the big boss comes in. Now here is where we start. Me, on y-axis I'm seeing time, on y-axis I'm seeing price. I'm seeing price, time, and I'm seeing candles. So if I'm seeing time, I'm seeing price. Let me, just give me a minute. I go take some water. So I was saying, if if now you start learning what you're saying now, in the charts, I'm seeing what? I'm seeing candles, I'm seeing time, and I'm seeing price. So first thing first, what a lot of traders run to is to learn is to learn time, is to learn candles, how to use a hammer, how to use the morning star, how to use those are the kind of candles you guys rush to learn. But me as big boss, I will tell you, don't learn those. Learn for the sake of knowing them, how to use each, how to use a hammer, a morning star, and what are these candles? Okay, how to use, how many candlestick pattern charts do you know? How to use a bullish hammer? That you should start from the basic. If you want to understand the candles, you start from the basics. The basics. A bullish candle, a bearish candle. That's where you should start from. The basics of candles. Then from there you will go to the basics of time. Basics of time, I have made a full course on quarterly theory strategy. So because if you need to learn time, then you need to learn the quarterly theory. If you need to understand price, then you need to learn the banking system and the banking orders and options. How the banks are entering based on price and your time in that. That is what you're trading. That is for the advanced traders. How to use a doji candle, how to use an hammer, how to use the term with the hanging man, inverted hammer. There are other candles called marubozu. I don't know them, but I know them. Engulfing candles like this. This is an engulfing candles, and other people will call this an order block, and other people will call this is a population block. This one, but we are not studying that. Spinning top, but most of the time there are people who have made good courses about candles for beginners. If I get time, I will formulate that and teach you that. But one thing you should understand is you're not going to learn candles by learning them from YouTube. Go in the charts and just start watching candles print. If a 4-hour candle has 240, 270, 240 1 minute candles, a 4-hour candle has 270 candles of 1 minute. All you need is to stay in a live market for 4 hours watching the 1 minute time frame. So you will have watched 270 candles within 4 hours print, and all the kinds of candlestick patterns will form within those 4 hours. If, trust me, if you watch like 10 4-hour candles, then you will be ahead of so many traders, so many of them. So I hope you have understood, because there is no shortcut for understanding candles and understanding price and understanding time. There is no shortcut for that. You gotta need to stay in the charts. You gonna need to stay in the charts and learn. Now, the best way to study these candles is go to a 4-hour chart, mark its high, its low, move to 1 minute time frame, and study the nature of the candles which are forming the 4-hour candle high and 4-hour candle low. You are not going to find that kind of information anywhere else. Big boss. Only me. Only me, brother. So this is how we do it. You go to the daily time frame. You mark its high, its low. Move to 1 minute time frame. Go check the nature of candles which formed the high of that daily candle and the low of that daily candle. Like yesterday, let me show you an example. I will go to the daily time frame like this. Previous day, which was on a Friday, you see, it was on a Friday. Then I will mark its high, its low here, and its high. You can see its high there, its high. Then I will move to 1 minute time frame. I will compress this chart this way, and then I will do this. Where is that day? The first. Then I will mark where is 0000. Midnight is there. So this day started from there. So which is the lowest candle of the day? Is this one. I will enlarge the chart this way. I will enlarge the chart this way, and I will find this was the last 1 minute candle of the day. Time, it was formed 10:33. So tomorrow, same time, 10:33, I will be in the market trying to check, will the market repeat the same thing it did yesterday? If no, then there must be some sort of reaction the next day, the same time. Now this is 10:33. You see, the last 1 minute candle of the day is an hammer. So this is the candle you should be focusing on studying, this one. If you see it in the charts, you can see so this structure, this one, you should be very careful with it. This one, you can see even market respected a value gap there and then moved upside. So this small structure here is what you should be focusing on. Learn this candle, learn this. Instead of learning consolidation candles, I need you to learn the candles which forms highs and low of the day. So in a way, if you see it in a 4-hour chart, you know probably that candle is going to form the low of that 4-hour candle or 1-hour candle, whatever time frame you are in, just in case you see it inside the candles. And the high is this one. This is the highest high there. That is the highest high of the day was formed there. It was formed during Asia. Asian high, Asian low were never taken out. Some market was consolidating within Asian high and Asian lows. About the Asian sessions, I have said I have made a complete course about the quarterly theory explaining everything. Go and check it. Now, you can see the kind of big candle which is forming. Can you see? 0157, 0159, then the first 1 minute candle of 2 a.m. market reverses for the whole day. So don't think here they used the candles to reverse price. No, they used time. They used time. They took market to a specific price level by the start of the next 1 hour candle so that they can reverse price. That is what has been happening. Now, to learn more, to get the complete course, now I will reach there. To get the complete course from the introduction to the advanced version of trading, then I have made a complete course. Now, I have said I will not be mentoring people online. You just DM me and you buy the course. I sent you the full course. How do you get me? Let me show you. Uh-huh. Name 2. Is it 43, 91, 99, 92? Yeah, that's the only way you can reach me and teach yourself more about trading. I gave you all you need to get started. That is very much enough. Now, 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 now. Now, for those people who are keen, I want you to mentor me personally. I will not be doing that. And if you want to me to mentor you personal one-on-one, me and you, on a Google Meet, then it's going to cost you a lot, because if I have a complete course and you want me to mentor you personally, then you're gonna have to pay a lot. For me, I choose, yeah, because I have discovered teaching it's taking a lot of my time, so that's why I decided to record all my course and keep it on a file format. So guys, see you on the other side.